أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم نحمده ونصلي على رسوله الكريم Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome to another Business Matters program. You with me, Anwar Mullah, and we coming to you from the studios of Radio Ansar here in West Road. And I have a very familiar guest in the studio with me tonight, and I'm going to introduce her to you just now. But before I do that, got some exciting news as well. I have a new co-presenter who's joining me tonight, and inshallah will become a regular feature on this program so that I can take life a little bit easier. So with that, my co-presenter is Altaf Mohammed. Altaf, assalamu alaikum, and a very, very warm welcome to Radio Al-Ansar.
Wa alaikum assalam wa rahmatullahi wa barakatuhu. Anwar, indeed, it's a great honor and a pleasure to be sharing the platform with you on the show, and certainly hoping to make it much easier and, of course, to bring in much more information and benefit to the listeners as well.
Altaf, welcome to the Business Matters program, and I wish you a long and successful stay with Radio Al-Ansar on this program.
Inshallah.
And may we together grow this program from strength to strength, inshallah.
Ameen.
And we certainly do that with the guests of the high caliber that we have here tonight, and she needs no introduction, and that's Yasmin Suliman. Yasmin, the tax partner at Bowmans Attorneys. Yasmin has been a regular feature in terms of being on the program whenever there's any tax issues, and certainly during the time of the budget. Although this year, I think she ducked me in some way or the other, and we didn't manage to get her in to do a budget presentation. But we've got her into the studio tonight, and she's speaking on something that's a little bit different but also relevant. And maybe we'll touch on certain aspects of the budget a little bit later on. But our topic for tonight is rollover relief, and she's the expert on it, and she's going to be talking to us about rollover relief. So, Yasmin, assalamu alaikum and welcome once again.
Walaikum salam. Good to be back.
Yes, it's been a while. Yasmin, rollover relief, something that I think most people are not familiar with. So you're going to have to kind of hold our hands and take us through this concept of rollover relief from the very beginning. So I'm going to start by asking you, what is rollover relief?
So rollover relief refers to specific provisions in our income tax legislation which allow taxpayers to move assets between companies or from their personal capacity into companies without causing yourself an immediate tax problem. So in other words, you can restructure your affairs, and often we see it in the group context, but it can apply to like personal businesses and trusts and other taxpayers as well. But you can restructure your asset holdings without paying immediate taxes.
Okay, when one talks of rollover relief, the immediate thought that came to my mind is a rollover of current taxes that one is kind of due to be paying. So is it something similar, or? So
it's not so much your normal income taxes on profits or your VAT on your normal transactions and things like that we're talking about here. It's things like where you want to do a major shift in your business. So for example, let me give you a simple example, right? Just say you're a sole proprietor, you're running a business and you're doing that quite successfully. And you say, well, you know what, I'm paying tax in my personal capacity now because the business is quite profitable and I'm paying quite a high tax rate in my personal capacity. What can I do to restructure that? Now, often what happens is most people want to move that business into a company. But the basic problem is that when you want to move it into a company and then pay the corporate tax rate of 28% and it'll go down to 27% next year, the problem is that you will have to incur some tax cost to do that. And normally that tax cost would be either income tax implications because you're moving your stock across, or you're moving your depreciable assets, or you will incur some capital gains tax. Now, what the rollover relief provisions allow you to do is move your assets into a company without incurring those costs. So that's where the beauty of these sections come in, is it allows you to, well, instead of being a sole proprietor anymore, you can be trading through a company, but you don't have to incur any tax cost in order to move those assets into a company.
So is rollover relief something new, or has it been there but something that we've kind of failed to look at?
So it's been in our legislation in various iterations over the years. In its current form, it's been in the legislation for at least 16 or 17 years.
Really?
But the problem with it is every year there are amendments. because they're very complex sections in the Act. And you know that, if SARS is allowing you to do something tax-free, it comes with a whole lot of strings attached.
Sure.
Right? So, but, if you take proper advice, it's possible to structure your affairs, use those relief provisions. For me personally, I do a lot of consulting in this area.
Right.
Because, it's very popular amongst your larger taxpayers, bigger groups and so on. But it is applicable to smaller enterprises as well. And I think a lot of people are just not aware of that.
Okay, Yasmin, a little bit later in this show something has just come to mind, and I want you to kind of think about, which I want to talk about as well, which also is related, is where there's this concept of a turnover tax and also a small business tax. Something that I think a lot of people also are not aware of, and maybe we can touch on those type of things, because it's something that I've come across recently, and I find it's actually something that if used properly can save you a lot of tax.
Yes.
And doing everything properly, of course. Yeah. But in terms of rollover relief, and I think as you said, it's quite complex, and it generally is applied to large corporations, etc., but can be used for the small man in the street as well. A simple example, maybe, where we can kind of break this down.
Yeah. So often what I find, you'll have a sole proprietor. Is a simple example, as I said already, where you want to, instead of operating as a sole proprietor, you will want to move your assets into a company and rather trade in the form of a company. And funny you mentioned that small business corporation. If, for example, you're running a business that's got like a 10 million rand turnover, you can move that business into a company and make use of the small business corporation rates, but have limited liability and so on. So the benefits of a small business corporation, and you can use the rollover relief provisions to do that, right? Another example that I come across quite often is where, for example, a trust owns a lot of assets, usually like properties and things like that, or it actually owns a trading business. And there comes a point where that trust is generating so much of profits that even if it distributes all its profits to its beneficiaries, the tax rates are still quite high. Now remember, a trust is taxed at 45% if you retain the profits in a trust, whereas if you distribute it to the beneficiaries, you make use of their individual tax rates, right? And there are instances where there's very successful businesses that are run through trusts, and then if you distribute those profits to beneficiaries, you still end up paying taxes at quite high rates.
Because each of those beneficiaries would be on maximum margins.
Yes, and by using that income splitting or doing that distribution, what ends up happening is that you create estate duty problems for those beneficiaries, right? So often what happens is we look at trusts and we say, okay, well, it doesn't make sense anymore. At one stage it did make sense to have it in that structure, but now it doesn't. Can we move those assets into a company that's now owned by that trust?
Okay.
Right? And it is possible to do that using the rollover relief provisions.
Okay, so when you say rollover relief, for how long do they allow you to kind of...
Right.
I would say it would be nice to roll over and just sleep, but I mean...
the rollover actually means to defer.
To defer,
right? So you don't have an immediate tax consequence. So what happens is, just say, for example, I've got this... I'm going back to the simple example of the sole proprietor moving his business into a company, right? Now, essentially how the rollover relief provisions work is that you'll pretend like that company always owned those assets.
Okay.
So if that sole proprietor acquired a property 10 years ago, you'll pretend like that company, even if it's new, bought that asset 10 years ago for the same cost as the sole proprietor did.
Okay.
Right? So when that company eventually sells that property, you will trigger the capital gains tax on that. Right? If you had to sell it in your personal capacity, if you sell that property at a profit, you would pay capital gains tax in your personal capacity. Now you're just moving it into the company will pay that capital gains tax. Right? Okay. Similar concept applies to other types of assets that you transfer across. For example, trading stock. If you're trading in your personal capacity and you're generating profits in your own name, you'd be taxed on that in your personal capacity. Once you move it into the company disposes of that trading stock. The income or the profit from that sale will be taxed in the hands of the company. So in other words, you don't cause yourself an immediate tax problem. What you're doing is you're rolling over the tax problem to the company.
But that can carry on for many, many, many years before it would trigger a capital gains tax implication. For example, if you take a property or in a form of stock, not so, because the stock would be selling all the time.
Yeah.
So, question that comes to mind is that as an individual, my capital gains tax implication will be a lot less than it would be in the company, because it's applied at my personal tax rate, but it's applied only a certain percentage of that. So why would I want to roll over?
Well, we do that for assets that you would want to keep long term, and you anticipate there's going to be a lot of capital appreciation. I can't explain to you exactly how we do this, but we can use a rollover relief provision for estate planning as well. Okay. So you could move your assets into like a trust, as an example, using the rollover relief provisions in order to save on future estate duty.
So when you talk about rollover relief, then in your reporting to SARS, how would you kind of make them aware of the fact that you are utilizing a rollover relief?
So it's normally disclosure in a tax return.
Is it?
Yeah. So especially company tax returns, there's specific questions that need to be answered. And it's very specific questions. They'll say, have you done these types of transactions where you applied Section 42, 43, 44, 45, 46, 47 of the Income Tax Act? And you have to answer them in a company tax return, as an example.
Okay.
Right? So there is specific disclosure. I will say that it depends on who you deal with at SARS. If you are a larger business and you're dealing with a large business corporation, or you're a high net worth individual and you fall into that particular division at SARS, those auditors are quite familiar with these provisions. But if you're dealing with the normal run-of-the-mill auditors that are doing compliance audits at SARS, generally they don't understand these provisions because they don't deal with them that often.
Okay, so you got to educate them.
No, I try not to. They must learn for themselves.
Okay, we on a larger scale, talking about corporations and the bigger kind of companies, what would they normally use rollover relief for?
So it varies. You see, the rollover relief provisions are normally they also call the corporate reorganization provisions, and corporate reorganization because they generally deal with companies. So all these provisions that I'm talking about, generally you're talking about companies that are involved in some shape or form, right? Now, in the larger groups, what tends to happen is that sometimes you'll have a merger or an acquisition. So, for example, just say I've got a client that wants to take over another business, right? Buys it out from the current owners of the business and then brings it into their group and then realizes, hey, we've got two companies that do similar things. Let's try and rationalize the costs. Don't have two audits, don't have two finance teams, rationalize the administration, create synergies. Let's merge the two companies together, right? In other scenarios, we have companies where they've got, or groups where they've got assets in different places. I'll give you an example. I recently assisted a client where they had properties in various companies in the group, and they said, no, they want to house it all in one spot. Okay. Because it's easier for them to use that portfolio to raise finance for the rest of the group and things like that. So we use the rollover relief provisions to move properties from various companies within the group to one particular company, and then they use that portfolio of properties to raise finance. Right?
Okay.
We see it in groups where they want to do BE transactions.
Sure, right.
So, BE transactions, you don't really need to empower all your assets. A lot of companies or groups identify which assets they need to empower. An example, I had a client that has got offshore operations and they got South Africa. Right. So they don't need to empower the offshore operations. They need to empower the South African operations,
okay.
In terms of BE ownership.
Because of legislation locally.
Yes, because of ownership requirements and so on. There's no ways they can get their BE scorecard right without getting the ownership factor correct. So, they will restructure their group in order to make it that the South African operations is sort of packaged in a neat way before they introduce the BE party into the ownership.
Okay.
Yeah.
Okay.
So we use, and then other things I've seen is like, for example, companies or different or clients are moving into joint ventures, and then each party has to prepare their side of the business to contribute it into the joint venture in a tax-efficient manner. So those are the kinds of things that they would use the rollover relief provisions for.
But if I were sitting on the other side of the fence, sitting at SARS, for example, why would SARS be so kind of generous, in inverted commas, in terms of allowing the rollover relief? Because at the end of the day, they would be losing out on a fair amount of tax revenue by allowing such a thing.
So there's a couple of reasons. One is that internationally there are dispensations elsewhere in the world that allow for different types of restructure, similar types of restructuring to happen without tax consequences. One of the major things that's deficient in our tax legislation is we don't have group taxation. Whereas like in the UK, as an example, you can be taxed as a group. Whereas in South Africa, we don't have that capability. Each company is on a standalone basis. You can't take the losses of one and offset it against the other and so on. So, that's one of the reasons. And then we need to be competitive. And it also stimulates economic activity. Because if you are prevented from, for example, that BE transaction now,
sure.
You're prevented from moving your assets. It becomes too expensive to do that. You can't facilitate the transaction.
Okay.
Same with a merger or like merging two companies together, where it makes economic sense to do so. There's benefits to the economy, but if it becomes a tax issue, ends up being problematic. And also, SARS is not completely hard done by, so they will get their tax eventually. They will get the tax eventually.
Okay, Yasmin, we're going to have to break for the news just now, and then we'll come back after the news and discuss tax rollover relief as well as other forms of taxation that we just spoke about. But before we do that, I'm going to just have to highlight the fact that there is a webinar taking place on tax rollover relief, which you're going to be very much part of. And it's under the auspices of AMAL, the Association of Muslim Accountants and Lawyers, together with Al Baraka Bank. And Al Baraka Bank always comes to the party with these things, and we need to thank them for that. The facilitator is Faisal Suliman, and I've actually just had dinner with him just now because a common friend of ours, Farhad from Caminettos, had his 60th birthday party at Caminettos this evening, and we all met as a group of friends to kind of honor him on his 60th birthday. So we just had dinner together, and I said to him, I'm going to the studio, and he says, yes, I know you're speaking to Yasmin tonight. So Faisal is the facilitator, and you're going to be presenting the main speaker, and it's going to be on the concept of tax rollover relief, and it's going to be on the 11th of June, and that's on a Saturday. The time is from 10 o'clock to 12 o'clock. The cost is it's got no cost attached to it, so it's free. Not many accountants do anything for free, but we thank you for that. And it's going to be on a Zoom video conference, and if one wants more details, then the Minara officers would be the right people. Amina, they would be able to send you the link, and then you would be able to get onto this, what I would term would be a very interesting and exciting webinar on tax rollover relief, especially if you're thinking of restructuring a business, I would think, in the near future. So thanks to Amal and Al Baraka Bank for that, and thank you, Yasmin, for that. I will remind listeners of it towards the end of the program again. Altaf, you want to...
Yes, so just a few questions from my side in terms of tax rollover. So we've covered quite a bit in terms of what it is. We defined it, we know where it can be used. But just a question that comes to mind, and perhaps a question that comes to the minds of many out there who actually want to go or consider tax rollover. What is the starting point, and what do they need to consider? Where do they start in terms of the process of a tax rollover? It's a daunting process. It could be involving a lot of paperwork, back and forth with SARS. What is the process, and who do we speak to? Where do we start?
Okay. So the first step is normally to find a proper tax advisor. It's a must. And the reason I say it is because even though I've told you very briefly what these rollover relief provisions are about, and they provide for quite a few benefits, it comes with lots of strings attached. So you do need to identify a good tax advisor and get proper tax advice based on the facts and what you want to achieve. I've been doing it, as I told you, I've been using these rollover relief provisions for 16 years now, and every single transaction is different because it depends on the facts, what assets the taxpayer has, what he wants to do with it, where does he want to move it, does he intend selling it at some point, are they financed, does he need permission from creditors before he moves any assets, does he need permission from his big customers, things like that. So you need to understand the facts, and then based on those facts, the tax advisor would give you the advice. The next step usually then is once you're comfortable that the advice is positive and it gives you the outcome that you want, so the structure that the end structure the goal that you want to achieve, the next step is implementation. And implementation may mean forming new companies, amending the memorandum of incorporation of companies, drafting legal agreements. And it's very important to have legal agreements for transactions of this nature because, the tax provisions provide that certain things need to be mentioned in the agreements, so or need to be documented in some form, and a legal agreement is usually the best way to do that. And then because you're dealing with companies and it's a very formal kind of trading structure, you need to have like resolutions by the company's directors or shareholders, and so on. Now, so after you get your tax advice, you probably will need legal advice as well. So you will need to appoint someone on the legal side, whether it is your lawyer that you normally use, but generally go for someone who's got some commercial experience, who's used to drafting contracts and so on.
Okay. Yeah. So my follow-up question was going to be, given that there's quite a few legal implications, one would need to actually consult with a legal advisor as well. And you've correctly pointed out it needs to be someone with a bit of commercial background, which is great. So just to sum it up, you need to get a good tax advisor who can actually hold your hand through the process. And of course, you use a proper commercial legal advisor for the latter part of the process. We also need to consider that there would be costs involved, and we've kind of touched on this. So do we need to prepare our listeners and those that are wanting to actually to consider tax rollover? Are there costs, and should this be prepared for as well?
Yeah. So look, remember, if you want to move your assets, for example, move back to that very simple example of the sole proprietor wanting to move his business into a company. If you were to do that without using rollover relief, you will trigger taxes automatically because the provision in the Tax Act says that if you have a transaction between connected persons and you and your company will be connected to each other, then the transfer has to happen at market value. It's deemed to happen at market value. So it means that you will, of necessity, be triggering all sorts of taxes if you had to do a straightforward transaction without rollover relief. What you have to do is weigh that up against the cost of getting proper advice. Right? So there is a cost of getting proper advice. You'd have to obviously engage with the services of an advisor, a tax advisor, a lawyer to draft the various agreements. Often the cost of doing so is far outweighed by the benefit, by the taxes you're not triggering upfront. Because what I often find is that people want to structure their affairs properly, but they're put off by the fact that they will have to trigger a whole lot of taxes to do that. Right? So I come across a lot of taxpayers who want to engage in, for example, in estate planning, but just the cost of moving the assets into a trust structure is so prohibitive that they just put it off. Right? Whereas if you get proper advice, you could potentially not trigger that tax, but then you'll have a cost involved upfront to get that proper advice.
Okay, so just as a follow-up question, if an individual is in the process of doing the tax rollover, and you did mention that the laws regularly change, and there is a change of law whilst they're in the middle of this process, does that new added legislation become obligated upon them, or do they just go with what the original legislation was when they started the process?
So you just have to keep an eye on it because our legislation changes basically once a year. So any transaction that you're busy with in the middle of the year, usually around July, you have to watch out for when the draft legislation is released. Because often what happens is if there's any amendment, they tell you what date that amendment is effective. So some amendments over the last few years have been effective immediately. So as soon as the draft legislation is released, say on the 5th of July or whatever it is, it's immediately effective, in which case any transaction that hasn't closed yet will be impacted. Right? Other provisions are only effective from a date in the future, so you can plan for it. I had an example of a client where there was quite a big change to the rollover relief provisions that would have impacted this particular client. Not all, it wouldn't have impacted all the other transactions involved, but this particular fact pattern meant that this taxpayer was going to have a problem. So we made sure we implemented that transaction before the end of the year because that new provision would have come in on the 1st of January. Right? So you have to plan it. So that's why you have to keep an eye out of where we are in the course of the year. At this point in the year, there's no draft legislation out. But if it hangs over till July, August, then I think you need to be careful.
Okay, great stuff.
Okay, Yasmin, rollover relief sounds all hunky-dory, but there must be some downside to using rollover relief as well.
So what you need to be careful of is that, as I said, SARS allows you to move things around tax-free, but it comes with strings attached to it.
Sure.
Right? So let me give you an example. One of the relief provisions is an amalgamation transaction where actually you merge two companies together.
Right.
Now, SARS allows you to do that tax-free, but one of the requirements is, in that particular case, that the company that ceases to exist, because you're now merging two companies into one of them is going to cease to exist.
Sure.
They need to deregister with the CIPC within 36 months.
Right.
And if you don't do that, you undo all the tax relief.
Okay.
Right? So, as I said, all these strings are attached. There was a case that actually went to court where the taxpayer merged two companies, they had transferred properties, but for some reason forgot to do that deregistration process, and it undid everything.
Okay.
Right? So, it comes with strings attached. That's why you need to understand what you're in for. There's also, the rollover relief provisions are there, but they interact with other provisions in the Income Tax Act. And, I've said it before and I'll say it again. South Africa is a third world country with first world tax laws. We have sometimes more complicated rules than even the UK has got.
Okay.
Right? So what you need to understand is that even though we have rollover relief, there are other provisions in the Tax Act that could be applicable. So I'll give you an example. There you are two sole proprietors who want to join their businesses together. So each of them contribute their assets into a single company. Right? Now, there are what we call value shifting provisions, which say that if I'm contributing 40% of the value, I must get 40% of the shares in that company. Now, that's common sense. Right? But if you're a father and son, you may say, the father will say, well, I would like to shift some value to my son. I don't want to keep all that value to myself. But if he does that, that's quite dangerous because the value shifting rules say you'll have an immediate tax problem.
Okay.
So that's why I'm going back to Altaf's question. It's important that you get proper tax advice because there are other provisions lurking around that you also need to be aware of. So it requires quite a bit of tax planning to get it right. But overall, most of the people or the taxpayers or the businesses that I've dealt with, overall it's worthwhile to do it because the cost of triggering that immediate tax is so expensive that they might as well do it properly.
Okay, Yasmin, I'm just going to move away a little bit from tax rollover relief. I think we've covered it quite in depth, and talk about two other forms of taxes that I've come across recently. And one is the small business tax, and the other one is the turnover tax. Now, I think it's unfortunately a lot of people have not utilized these two taxes, and they do provide a fair amount of relief for the small business up to a certain amount of turnover. And I was pleasantly surprised when I could see the relief that one could get from being a small business under a certain turnover again from these two types of taxation. But something that unfortunately accountants haven't really kind of encouraged or highlighted to their clients. So I don't know if you can talk to us a little bit about the small business tax and then maybe after that the turnover tax and what type of people would they then be applicable to?
Okay. So look, I'm very expensive to advise clients of that nature, so I don't have a lot of those kind of clients in my client base, I'll be honest, right? But I do interact with a lot of practitioners who have advised their clients on turnover tax and using particularly the small business corporation because that's far more popular, right? So let me deal with the turnover tax first.
Okay.
The turnover tax is for businesses that are below R1 million.
Who do a turnover of less than
less than R1 million. Now, that's really a small business because you're talking about turnover of less than 80,000
rands a month.
Yeah. Right? And most of those kind of businesses actually probably won't even be in the tax net because they're not really obliged to register for VAT because they don't reach that R1 million threshold yet, right? So if they're trading as a sole proprietor, maybe the turnover tax in some cases, depending on what their margins are, may end up being more expensive.
Okay.
Right? So they just have to be careful because turnover tax, yes, it's less in terms of paperwork, maybe, because all you have to keep track of is your turnover.
Okay.
But the reality is that you're paying tax on turnover. If you've got a low margin business, you're going to eat up your margin by paying the tax.
Okay, but the turnover tax of the 1 million is your maximum.
Your maximum.
So what does it mean? Is that if you're doing a turnover of less than R1 million, you don't pay tax?
You pay tax, but based on your turnover level. I don't know the rates offhand.
Okay.
I don't know the rates offhand, but I mean,
a lot more favorable than your normal tax tables are.
Well, not really, because remember, your normal tax tables tax you on profit.
Okay.
So you'll take sales minus cost of sales minus operating costs, and your net profit could be quite low.
Sure.
Right? Whereas here, you're paying tax on turnover regardless of whether you made a profit or not.
So what about a person that's kind of, say, getting commission income?
Yes.
Would they be able to, say they're receiving just pure commission income, there's no expenses, would they be able to qualify for turnover tax?
I don't think so. I think there are some exclusions from turnover tax, and I think personal services may be excluded from it. I stand to be corrected. It's really not my area, so I can't tell you, but I think commission earners would probably be excluded there.
Okay, so that brings us to the second part, which is the small business tax, and talk us a little bit through that.
So that one is very favorable and very popular as well, and I think most practitioners are aware of it. As I said, I deal with quite a few practitioners, and they've mentioned to me about their client base, and a lot of them seem to be following this route for their clients. So essentially, I mean, a small business corporation is a company that's owned by an individual, a natural person.
Right.
Or maybe more than one natural person. But there are some restrictions, so you can't have multiple companies. You can only really have one company. There's also restrictions in terms of what kind of services you can be performing, right? So generally, there's a restriction against personal services. So for example, if I decided to leave Bowmans and start my own practice, and I'm a one-man band practice, and I meet the turnover threshold to be a small business corporation, because it's a personal service I'm providing, it's services that I personally have to perform, I probably wouldn't fall into the small business corporation. But if I had more than 3 employees that were unrelated to me, then I probably would fall into the small business corporation rules.
Okay, so I was going to come to that because I think one of the rules states that you cannot be a director of more than one company. So you have to be a director of just one company, and that is that particular entity.
I'm not sure if it's director or shareholder.
Okay.
But I think it's shareholding. But as I said, it's not really my area. So
I think the other thing is you have to create employment for about 3 people. So you have to have at least 3 employees.
That's for personal services. But if you were trading,
right.
So if you were running a shop or you were selling goods or so, I don't think there's a requirement that you need to have a minimum number of employees. What you do need to do is meet the turnover requirements. The turnover requirements is, I think, less than a 20 million rand turnover a year. So if you do meet that requirement and you don't have interest in other CCs or companies, then you can utilize that small business corporation. Now, what the benefit of it is that you have graduated tax rates, like as if it's a individual up to a certain threshold. So it's like as if you're trading in your personal capacity, and the first 90,000 odd rand of your personal income is not taxed.
Sure.
Similar kind of rule applies to that small business corporation. So up to a point, you're actually treated like a natural person, and then after that, the corporate tax rate applies to you. So it can be quite beneficial to actually have it in that kind of entity, because you do sort of get the benefit of your tax rebates and all that, and so on.
There's another tax, and I'm not sure exactly what it's called, but where you do a turnover up to 5 million and you get a flat tax rate or on your profits of 5 million. I think it's taxed at a rate of 10%. Are you familiar with what I'm talking about there? Not so. Okay.
No.
You say,
you're teaching me stuff.
The problem is you're dealing with two high net worth individuals. This is all a little bit under the radar. But anyhow, we'll get to that, because they I'm sure there is something like that in the tax laws. So but I think what the bottom line is, the lesson to be learned from all of this is that as an individual, it may cost a bit of money to appoint a tax practitioner or an accountant, but there's ways and means in which you can actually benefit from the experience and the knowledge of those people, and they can kind of save you a lot of tax along the way by all of these various legislation that's there, that actually is there for the benefit of the man in the street.
Yeah, at the end of the day, you have to do a cost versus benefit. Right? If your business is really quite small, probably it doesn't make sense for you to incur that cost to save the tax. Right? But if your business is worth a couple million rand, then it's worthwhile, because the tax on that, whatever you're saving, I mean, it more than justifies whatever cost you're going to incur. Yeah,
but you have to submit tax returns anyhow in a lot of the cases. So if you're doing your own tax returns, sometimes it may be worth your while getting the advice of a tax practitioner and letting them do it for you, but also giving you, I mean, yes, they would have to. You would have to justify it by saying that they've actually saved you more money than what you spent.
Well, I think you can see it in one of two ways. I mean, some of the clients I've got, I don't really save them any money, but I save them a lot of trouble.
Okay. Yeah.
So sometimes, we'll for some larger companies, we review their tax returns, or we actually prepare their tax returns for them because it's quite complex. And sometimes we end up increasing their tax liability from what they calculated.
Right.
But we're saving them trouble because remember, if SARS does an audit, it's not only the tax that's payable, it's the penalties. And those penalties are quite hefty at the moment. That goes up to about 200%.
Okay.
So sometimes you save them trouble rather than just saving them tax, which is not as easy a pill to swallow as saving them tax as well.
I think the bottom line is the tax that you pay is generally a grudge payment for everybody. So whether it's direct or indirect taxation, it's grudge. And in terms of where we are in the economy at the moment, interest rates going up, fuel going up, disposable income is a problem. So everybody's trying to save where they can, and paying tax is generally just a grudge payment.
Yeah, look, I mean, that overwhelmingly is the position of most of the people that I speak to. Although not yesterday, it was Monday that I met yesterday. I met a client who said, taxi is the price I have to pay to live in this country, so I might as well pay it.
Okay.
And I was very surprised because family-owned business, you generally don't get that kind of sentiment,
Okay.
So, I think it depends on your point of view. Generally, I think if people see that the money is well spent, I think it would be less of a grudge purchase.
Well, being in financial services myself, the general comment that one gets is that if I was getting a bang for my buck, I wouldn't mind paying. But in this country at the moment, unfortunately, we're paying more and more, but services are getting less and less. And one could see it clearly now with the floods and things like that, is that no electricity, no water in a lot of cases. Some areas like Tonga are still sitting without water 6 weeks after. So people are saying, well, what am I paying for? I'm paying all of these things, whether it's direct or indirect.
Sentiment is justified.
I'm paying rates, I'm paying all of that, and I'm not getting value for my money.
Yeah, that's true. But I have to say, the larger corporates, they also look at it from a risk perspective. Yes, it's a grudge purchase, but they might as well take care and pay what is due in case they are hit with penalties, because they are the soft targets as far as SARS is concerned.
Yeah. So I think, it's very important to understand that the benefits of the process, if one looks at it, far outweighs the costs in the medium to long term. And like you've correctly pointed out, a lot of corporates, they're an easy target, and the law would really be used against them. So they need to actually have this in place, have the protocols in place, follow what the legislation requires, use the right avenues like your tax practitioners and your legal advisors, and get to the right point in the right way. So it saves them a lot of time and issues. Yeah. But thank you for that, and we appreciate your presence.
We would just end the program with once again thanking Yasmin for coming into the studio. Always willing to assist us. And just to remind again on the seminar that's coming up, that's the Tax Rollover Relief Seminar, hosted jointly by Amal, Association of Muslim Accountants and Lawyers, and Al Baraka Bank, and that's going to be on the 11th of June. That's this Saturday, and 11th of June is this Saturday. That's right. It's 10 o'clock in the morning to 12 o'clock. The cost is free. It's a Zoom video conference, and I would suggest getting hold of Amina at the Minara offices, and she would be able to put you in touch. And the number for the Amal office number is 031 207 3381, and I repeat that, 031 207 3381 if you want to get registered for that webinar. Or you could email info@amal.co.za. That's info@amal.co.za. And I'm sure with an exciting speaker like Yasmin and the facilitator being Faisal Suliman, we're going to have an exciting seminar coming up on Saturday. So Yasmin, once again, Jazakumullah, and please don't duck me next year when it comes to the tax issues. And I'm sure
cancelled this year. Huh? You cancelled.
And we got the midterm tax, the budget coming up, I think in August or so. So I'm hoping to get you into the studio to talk to us a little bit about that as well. Altaf, it's been a pleasure having you here, and inshallah we'll see you here on a regular basis in the future.
Absolutely. It was an absolute honor and a pleasure being here, and I'd just like to take the opportunity in thanking Yasmin for joining us this evening. Jazakallah.
Zakaria behind the technical stuff this evening. Zakaria, Jazakallah for being there. And with that is wassalamu alaikum wa rahmatullahi wa barakatuh.